If you've been trading for months, maybe even years, and you're still not consistently profitable, then I know it's not some secret method that you're missing out on. In fact, after 6 years of trading, I think that the complete opposite is true. I've watched countless traders spend years chasing the next strategy or the next setup or the next mentor, thinking that success is just one video away. And then they always eventually quit. Not because they didn't work hard enough, just because they spent all that time making trading much more complicated than it needed to actually be. And when they walk away from it, almost all of them believe the exact same lie. I just never found the exact strategy that works. When the reality is, traders don't fail because they know too little, they fail because they're trying to do too much. The charts are going to be covered in indicators. Every losing streak sends them looking for a new strategy. Every YouTube video becomes another opinion that they feel they have to follow. And after months, sometimes years, you're no longer actually building a skill, you're just collecting information. Every trade becomes a completely new decision instead of repeating the exact same process. And I know what that looks like because I've lived it. I started trading around 6 years ago with only $2,000 to my name as a plumber. No finance background, no handouts, no shortcuts. Since then, trading has become my full-time career, and over multiple market cycles, I've managed to build a portfolio that doesn't only provide for me, but also my family every single month. And if there's one lesson that all of those years have taught me, it's this. The traders who finally become consistent aren't the ones who discover some new magical strategy. They're the ones who remove everything that doesn't matter and simplify it. What I am going to show you is the framework that completely changed the way I trade. Not because it's complicated, but because it's simple enough to repeat over and over again. And that simplicity is what almost everybody gets wrong. Okay, so diving straight in, the first thing I want to get into is your daily bias. This is stage one or step one. Determine your daily bias and your draw on liquidity for the day. So I'm on the 4 hour here, but let's look at what a bullish example would look like. Of course, we're having higher highs and higher lows to move upwards in the market and show that we are bullish. But sometimes I understand it's not as straightforward to see this on the charts. So how do we identify this with a lot more strength? Well, we use fair value gaps to our advantage. Let's say, for example, there's a fair value gap on the 4 hour here that we see. Then we know that we've reacted out of that fair value gap and we're moving bullish. Also, there might be a bearish fair value gap here coming off this leg individually, and we've pushed straight through this. Again, because we're inversing bearish fair value gaps and we're respecting bullish ones, this is a perfect example that we're moving bullish, and this is exactly how we would determine that we are bullish on the day. And exactly the same for a bearish example. If we are respecting bearish fair value gaps like so, and then every time we have a bullish fair value gap like here, we're completely inversing through it. This is a perfect example that we are bearish on the charts, and now we know our higher time frame bias for the day, and we can also start to look for our draws on liquidity. So, for example, if the charts look like this, then we know that because we've been chasing the highs on a bullish move every time, and now we're here, we're most likely going to chase this high, so this can be our draw on liquidity for the day. And vice versa, if we're chasing the lows every time, we take this low here, and then again, we take this low here. So what can we expect to do? We can expect to take this low here, so this can be a draw on liquidity if we needed. Also, we can look on the lower time frames for smaller draws on liquidity as well, but I will get into that later. So step two is to drop down to our lower time frames, which is around the 15-minute and the 1 hour, and we want to identify our key levels. So what I mean by this, let's look at a bullish example. Say we are moving up like so. Then I want to identify our key levels that we can react off. Of course, we've had our bullish fair value gap here. We've had probably another bullish fair value gap here. And we've disrespected a bearish fair value gap here, for example. But then we also have a bullish fair value gap on this leg here, on the 15-minute or on the 1 hour. So we can expect price to come down into this level, tap off, before it continues to move upwards. This would be our second step. This would be our key level, is to look for these specific key levels. Again, in a bearish example, I'll show you guys quickly. So we're moving downwards like so. And as you can see here, let me just drag that a little bit lower. We are slowly moving downwards, and we are probably respecting a bearish fair value gap here. So we would hope to see a bearish fair value gap maybe here. Now, again, there's two ways you can look at key levels. You can look at them as fresh fair value gaps that we're waiting to enter on the 15-minute or the 1 hour, or you can have examples like this. So because we've already tapped off this 15-minute fair value gap, for example, you don't need to consider this as an area that's already been mitigated or already been tapped into. What you can use this for is to count resweeps, and they are sweeps of internal highs or internal lows within a fair value gap. So because it's came and swept the start of this fair value gap, we can wait for price to come back in and tap in this fair value gap and not only respect the fair value gap again before it moves in the opposite direction, but also we're sweeping the liquidity of that previous high inside the fair value gap. So not only have we hit the fair value gap and stayed in and respected, but we've also swept liquidity. This is a super strong confluence or key level as to why price might move down. So either or can be used, just standard fair value gaps or internal highs or lows. I'll show you on this specific fair value gap. Let's say price comes in like it has here, and then it moves away, but then it comes back in, sweeps the low before moving. This is a perfect confluence for us because we're sweeping the internal low here within a fair value gap, still respecting this fair value gap, but also sweeping liquidity. So either or works. This example or just standard fair value gaps on the 15-minute, 30-minute, 1 hour are perfect examples of our key levels. Now that we know our daily bias and we have our key levels marked out and we've tapped into that key level and we're waiting for price to move in the direction, we want to drop down to anywhere between the 5-minute and the 30-second chart and always look on the highest time frame out of them time frames for an inverse fair value gap for our entry. So let's say, for example, we've dropped down to the 5-minute now and we're looking for sells. Our daily bias is bearish, and on the higher time frames, this is our key level where we've came in and tapped maybe a 15-minute fair value gap, and now we're starting to react out. This is what price looks like on the 5-minute, and as you can see here on this leg up, coming up to the leg, there is no fair value gap that we can inverse. So because of that, we drop down to the 3-minute. And let's say, for example, now on the 3-minute, there is also no example like this. So we drop down to the 1-minute. Now on the 1-minute here, this is how the candles might look. And you can tell that we have a fair value gap, a bullish one right here. So what we want to do now is we want to wait for a candle to full body close and inverse this. That would look exactly like this. The body needs to close below that inverse, that fair value gap line to completely inverse. And then once this has happened, this is where we would look at taking an entry on the candle close with our stop loss at the highs roughly of the bodies. And I'll take profits at a 1-to-1, which would be around here in this case. And then also we can set further take profits at our new draws on liquidity for the day with that first one in mind that we marked on the 4 hour. But the main thing we're chasing here is a 1-to-1. So it's that simple. It's 3 steps. It's determine our daily bias. It's find a good key level for price to react out of and wait for an inverse fair value gap on the highest time frame. Now I'll get into a live example on the charts to go through exactly how this would look on a day-to-day basis. But just quickly, if you guys are interested in getting a full free PDF going over this exact strategy and framework and how I use it on a day-to-day basis, then click the link in the description to get access to our free Discord where you can get a PDF explaining this for completely free. Without further ado, let's jump into the example. Jumping right into an example. Let's look on the 4 hour here. And as you can tell, looking at the 4 hour, we are bullish. We have not only came up and continued to move upwards, but we have a new week opening gap here that we've actually came into, tapped out of, and started to move away in towards this new 4 hour fair value gap right here. So because of that, our daily bias is bullish. Now, yes, we can set our draw on liquidity all the way up here if we would like to. However, that because we are on the 4 hour, that is probably a little bit far away. So because of that, we will end up just bringing it a little bit closer, most likely. And well, we'll see what better draws on liquidity we can find on the lower time frames. So dropping down to the 1 hour now, just to start to check for our good areas to look for key levels or draws on liquidity. Now, as you can see here, we have a 1 hour fair value gap that seems to be very, very close. So this is the start of the 1 hour fair value gap here. I'll just draw that as a box for you guys just so you can see. As we come to tap into this 1 hour fair value gap, that's where I would consider a very strong and easy take profit is to achieve because we're already bullish and this is a close draw on liquidity, so price is almost guaranteed to come to this point. Don't forget, we're still on a higher time frame and the markets still haven't opened yet, because it's not 2:30 p.m. UK time or 9:30 a.m. EST, because we trade this on the New York Stock Exchange open. So with that in mind, we've now got our bias, which is bullish, and we have our draw on liquidity, which is here. And if we wanted to chase here, but this is our main draw on liquidity. So I'll actually just quickly write that out for you. Okay, and now what we want to do is we want to look for our lower time frame key levels. So if we drop down to the 30-minute here, I mean, as you can see on the 30-minute right now, actually, there is a perfect 30-minute fair value gap right here that we could want or expect price to come and tap into and then move out of. So with that being said, we're now just waiting on these lower time frames for price to come and tap into this fair value gap and then move away. So I'll drop down to the 5-minute and we wait for our market open. And as you can see now, after this candle, the market will have opened here. This is the candle that's open in the market. So with this in mind, we want to play slowly and wait for the candles to form on the 5-minute until we hit that 30-minute fair value gap. As you see, we have hit it here, but it's very difficult for us to achieve that fair value gap because of how far away it is. So I'll probably drop down to the 3-minute. Now with a 3-minute, that's a lot clearer. So what we're doing now is we're waiting for price to come up and inverse that fair value gap after tapping the 30-minute. And as you can see here, we've came up, but we didn't manage to inverse this on the 3-minute. So now we've created a new leg right here, because this is a new bearish candle down, so we can start to look for inverses on this. Now, if I drop back to the 5-minute quickly, you can see we didn't inverse this here, and there's no fair value gap on this leg. But now if I drop to the 3-minute, as you can see, there is a 3-minute fair value gap that's being formed right here. So because of that, that is the highest time frame fair value gap on the newest leg possible. So what we're going to do is wait for an inverse of this fair value gap before we enter our trade. And as you can see on the next candle here, we get that inverse. So we would be entering a long position on the entry of this body close with our stops at the body low of this move upwards. And our take profit can be set to our 1-hour draw on liquidity, where that 1-hour fair value gap will be coming up to tap. This would give us just over a 2.5 RR. So we had a bullish daily bias. This is our draw on liquidity, the 1 hour. We then had our key level, which was a 30-minute key level here. And then once we reacted off that, we made a new leg down here rather than using this leg, which was a lot easier for us to get an entry. Highest time frame was a 3-minute. We inversed, we enter. And this trade did, in fact, play out. There you go. So as you can see, we hit TP with a 2.5 RR. Now, the one thing I do want to mention is, remember, we did say a 1-to-1 RR. So if this was a 1-to-1 RR, I'll just drag this down to 1-to-1, which is there. You would have hit that in the first 6 minutes of this trade, and you would be in and out with no issues. Now, if you did want to stay in this trade until this point, then I'll be honest, this would be a perfect break-even point, because you've came up most of the way to your take profit. So you go break-even here to take your risk off a table. If that was the case, you would have hit break-even and you would have been taken out at break-even. If you played risky and you stayed in, you could have catched that 2.5 RR. Now, because of all of this discrepancy, if you want to follow this as mechanically as possible, always set your risk to reward to 1-to-1. As you can see, you can hit this in 6 minutes. You're not going to have any issues or any complications. Once you become a bit more comfortable and strategical with the strategy, you can start to set your TPs to much bigger and have confidence at place to set break-evens, or if you want to play riskier, this is where you have that leeway. With that being said, I hope you guys did find value in this. Like I say, if you do want the full strategy PDF in PDF format, then make sure to click the free Discord in the description, where you can get full access to that completely free. And I'll see you guys in the next video.